welcome after lunch. We hope to entertain you just a little bit more than the lunch. So my name is Mariana Danilovic. I am a managing director of Infiom, which is a global acceleration network that connects Fortune 500s with the global accelerators and funds in the blockchain and disruptive technology spaces. And today we're trying to connect the dots, so where the next growth will happen in this business and how are the institutional investors as well as the retail investors going to respond to this and how these companies are going to lead us in that direction. So we're going to start with Kat Sullivan. She's going to tell you a little bit about Galaxy, all of their different initiatives in 2 minutes, and introduce herself.
Great. Hi, I'm Kat Sullivan. I'm a member of the Galaxy digital team. Before joining Galaxy, I had a career on Wall Street. I was mostly on the trading side, focused on algorithmic sales and portfolio trading, serving hedge funds, long-onlys, and pension funds. While I was doing that, I was II ranked #2 best electronic salesperson on the street. And then I gave that up to dive headfirst down the crypto rabbit hole and join Galaxy. Galaxy is a fintech merchant bank, and we are recognized as sector leaders in our 4 businesses, which are trading, asset management, advisory, and principal investing. To give you a little bit of sense of what that all means, on the trading side, we look just like a Wall Street FX trading desk. We manage risk, we do lending, electronic trading, and our expertise in the space and ability to manage capital allows us to be a top player there. On the asset management side, that's the team that manages third-party capital. We kind of package up exposure to the space for institutional investors. So we have the Galaxy Bitcoin funds, the Galaxy Crypto Index Fund in partnership with Bloomberg, and soon to launch Galaxy Venture Fund. The advisory team acts just like a traditional investment banking group. So they're doing private capital raises through IPOs. Very proud to say we were on the 2 US IPOs that occurred in Q4, one on the NYSE and one on the NASDAQ, a great sign for the maturity of the space. And then last but not least is principal investing, and that's how we deploy capital to the space. So acts just like a traditional venture capital team. So asset management, trading, advisory, and principal investing, and kind of supporting all those teams are legal, compliance, operations, and finance and research. An easy mental model to use is we are a crypto and blockchain focused Goldman Sachs, very similar model, just offering products and services to the institutional community and the crypto community.
Amazing. It's nice that we have some of those companies in the space already. Shows that Wall Street is meeting crypto. Jeanine Hightower-Sellitto is the managing director of operations for Gemini, which is a regulated exchange, and she's going to tell us a little bit about her and the company.
Good morning. Well, I guess good afternoon at this point. Jeanine Hightower-Sellitto, as Mariana mentioned, I'm the managing director of operations at Gemini. Basically, I run the custody, the cold storage custody business, as well as the exchange business for Gemini. I have a long career on Wall Street. I worked on Wall Street for about 20 years before joining Gemini, almost all of that working for securities exchanges. The longest tenure I had was about 14 years at a listed options market called the International Securities Exchange, which was a fintech startup back in the year 2000, which brought electronic trading to the options market, which prior to that had all been done on paper with people standing in trading pits in Chicago. So we had a really successful run, ultimately went public, was sold to Deutsche Börse, and then ultimately sold to NASDAQ. And after that, I joined Gemini, looking to do it all over again in a new space that was growing. So a little bit about Gemini. Hopefully some people are here familiar with Gemini. We are a cryptocurrency custodian as well as exchange platform. So customers come to us to buy, sell, as well as store their crypto holdings. We have customers like Galaxy that are on the institutional side that use Gemini for our services, as well as many retail individual customers. Our model is sort of complementary to what Kat's business does. We operate similar to what the New York Stock Exchange does for crypto. So we are a regulated platform that will allow you to trade your currency, as well as sort of vertically be integrated in terms of the storage of that, as well as being able to send that to other destinations. So we pretty much are full service for retail customers as well as institutional customers on the back end trading and storage of crypto.
And we had to find a male representative for this panel of taking us to the next level of Wall Street meeting crypto. And so Nitin Gaur was the best candidate we can possibly find. We searched long and wide. He's actually written quite a few books on the topic and also has founded several labs at IBM, and he'll tell you a little bit about.
Thanks so much. My name is Nitin, and I serve as Director of Digital Asset Labs at IBM. I founded the original blockchain labs at IBM, where we were trying to do a lot of work with clients. There's a whole period where there's a lot of confusion between the difference between Bitcoin and blockchain. And it was my team that globally worked tremendously hard with our financial services clients to be able to design and do soup to nuts from technology solutions for them to be able to understand the impact and be able to solutionize things around blockchain tech. I soon realized that after 2 years of romancing with POCs and POC galore, everybody was doing a POC and all of them were successful, but didn't really end up in something which is more tangible. And so I realized that we were solving mostly for database problems. So we went back down the path of working with IBM Digital Asset Labs, which sort of bought the notion of digital assets, and then blockchain became more meaningful and sensible because at that point you need transaction systems for you to be able to move these digital assets. And in that work, my global team has worked with about 19 central banks for CBDC or central bank issued digital currency projects, stablecoin projects with large banks in terms of understanding the business models, also tokenizing assets, which is gold, real estate, and so on and so forth. So my team now heads down, works with some of those, not just the technical facets, but also the business model that govern the movement of digital assets. I'm also building a payment network, B2B, as well as remittances model, where I'm the CTO of that initiative called IBM WorldWire. So that's short.
Excellent. Just by a show of hands, I always like to find out who's in the audience. Are there any institutional investors in the audience? Okay. How about any retail investors? Do you hold cryptocurrencies? Okay. Any technology companies? Lots of technology companies. Any large companies trying to get into blockchain and working on projects? Okay, great. So we're going to talk about things that are relevant to all of these audiences and possibly some others. First thing is really adoption. And Kat, maybe you can address the institutional adoption of blockchain and cryptocurrencies.
Yeah, Galaxy does so many things, but I guess for the purposes of this discussion, I'll just focus on our asset management business and institutional allocators and kind of the call that's been coming from those in the industry of like, where are the institutional investors, when are they coming, and I'll kind of outline kind of what it will take to get there. So I think you can broadly think of kind of 2017, 2018 as a year of announcements from a lot of institutional products and service providers. And last year was really an incredible laying of the foundation for a lot of the things that institutional allocators need to see in order to write those institutional size checks. I'm talking about the liquid crypto market. So today I'm talking about Bitcoin. And I think some of those things are that institutional allocators need to see is regulated price discovery. Those kind of like having clear regulatory guidelines on what the underlying crypto asset is. Is it a security? Is it not a security? Having that clearly defined, and then making sure that the price discovery mechanisms for any wrapper, those things are happening on regulated exchanges. We've seen that space grow tremendously over the last year with Bakkt going live with physically settled Bitcoin futures. And then in the last quarter, they also rolled out cash settled futures, Bitcoin options. You had, prior to that, only, SIBO and CME launched early 2018, but then last year also saw SIBO drop out of that But you have places like Gemini and other exchanges operating in a regulated manner on the exchange front. And the more robust that you can have a regulated spot market and a regulated derivatives market, the happier that's going to make institutional allocators, and they're going to be able to check that box. In addition to that, you really need to see kind of marquee names on the legal, tax, audit side. And I'm proud to say that after many, many months, if not years of hard work on a lot of those fronts, all of our funds have Big Four auditors on legal and tax, and we have a top name, on tax and audit, and we have a big name on the legal side. And that really adds to the ability for a global consultant to be able to sign off on the operational due diligence piece of this space. And once you can get a consultant to say, I'm able to underwrite this fund, then you can have the pensions and endowments and foundations kind of write those checks. But you really need all these pieces to come into play, and we haven't seen that up until now. And it's a little different on the illiquid side, on the venture side. You've certainly seen U.S. endowments playing in the space and allocating to venture. We are actually about to launch a venture fund to meet that demand, and our venture exposure, we've been allocating balance sheet capital to the space for years, since our firm's inception, and we're opening up that strategy for the first time to external investors. And that's because there aren't institutions really willing to take that career risk on the liquid side, but they want exposure to blockchain. They want to make sure they're seeing around the corner. And for a lot of them, the right way to put a chip on the table is to allocate to a venture fund. So we're really excited about that.
And on the retail side, we have adoption too.
Yeah, so just to piggyback on what Kat was saying on the institutional side, Gemini covers both institutions and retail customers. I think from the direct acquisition of Bitcoin, we sort of sit on opposite ends, where there's definitely institutional customers that need to go by way of fund in order to be investing in the space. And then there's others that will just come direct to the markets, whether it's through an OTC broker or direct to an exchange to acquire assets to invest in. And I think for us, we see it maybe a little bit differently because we're not dealing with those. And I think the early forays are those that are investing in funds because they have someone else, for lack of a better word, doing the work for them. And so they can get comfort, and they can also, well, you would say, before I might say, pass the blame along if something were to go wrong by using an outside validator for what they're doing. But in the exchange space, similar to if a fund is buying individual stocks, if they're coming to an exchange like Gemini to buy individual crypto, some of the concerns that they have, we're trying to address. And I think the space is moving a long way, not just Gemini, but also our competitors. We talked about regulation a lot. I imagine there's a lot of people in this room that are confused on what that means, but that means working with federal regulators to try to create clarity for securities questions, for market stability questions, for market manipulation questions. Right now, most of us are regulated in a wide web of state regulations, and many of us are working together as an industry trying to create some type of uniform federal regulation for crypto, similar like you'd see for the securities market or the commodities markets in the US. So that's a big thing, I think, that will help drive institutional adoption, as well as questions related to safeguarding of assets. Gemini, as I mentioned, is a custodian of assets. We've seen, I think one of the biggest things that we've seen in the last year was we recently announced a partnership with Steet to be a sub-custodian for them for crypto assets for their customers. And while that, it's sort of interesting the way that Gemini is the custodian, we're the ones that are holding the assets, but why is that important? And it's important because, as Kat mentioned, it brings a brand name in to funds that might not otherwise be comfortable with a crypto only or a fintech startup holding their assets. They really need someone that's gone ahead and done the validation, even though it's widely transparent that it's Gemini acting as the custodian, but they have confidence in Deloitte doing our SOC 2 and State Street sort of being the overarching custodian of record for those assets. So those kind of developments, I think, are moving things for institutions in the right direction. And on the retail side, it's a really different game. Retail customers While they resonate with the idea of trust and security, at the end of the day, it's the interface, it's the accessibility, it's sometimes just the fun and the ease of use, and the fonts that you choose on your app that get retail customers involved. And while we operate, and it's interesting if you think about it, because we operate for retail customers on the same exact platform where institutions are trading on a daily basis. We operate the same matching engine, they're all in the same book, but the interfaces that they use and the ways they come into us are really different. I think one thing that is not well understood is that in the security space or in the commodity space, you use a broker or you use an FCM to get to a market. So they're actually the one representing your order when it goes to the New York Stock Exchange, or more likely to a wholesaler, and it never actually gets to the exchange. But beyond that, that's really how most people are familiar with the markets today. Crypto's not there. We deal direct with retail customers. There really aren't introducing brokers. And so that security and that trust and that experience come direct with the exchange platform. I mean, that's something we continue to build on, but I think will change over time as some of the more traditional retail brokers get into the space and start looking at crypto. And they're there. We have these conversations. But again, there's a lot of headline risk that comes with crypto. And so they're very careful about moving forward.
So if we step back, Nitin, and look at what both Kat and Jeanine just said in terms of the chain of custody or where the actual flow has been, you're thinking of this year maybe as looking at sustainable finance and kind of looking at a holistic approach to this, to moving it to regulated space. Can you tell us a little bit more about that?
Yeah, sure. So every year I sit back and look into why I joined the space, and it's been 6 years in the enterprise space, working with State Streets and BNY Mellon of the world and figuring out as to what are we really going after. So it's one thing that most of these entities are looking at, digitizing securities or tokenized securities, so to speak, and the entire supply chain of that ecosystem. But at the same time, I think the work that me and my team sort of are doing globally is to not only address the notion of digitizing these value chains, so whether it's capital market infrastructure, payment market infrastructures, which sort of today are fragmented ecosystems, moving securities, whether it's hedge funds or security, lending use cases, and treating money in return. I think these are completely fragmented ecosystems. And I think that's where the challenge is that we early days did a lot of research and analysis on is what is the value we put on these things. So this year I made a focus of sustainable finance because I think one is that there's an enormous amount of increased awareness in terms of where the money is heading or where the money is being invested, whether it's the ESG factors, which is the environmental, social, and governance elements of each entity's managing their business. But at the same time, I think there's a massive demand from consumers, from retail perspective, and understanding as to what are they buying for, what are they paying for, right? And where is the money going? Is it going for nefarious purposes, or is that being used and being utilized in the right way? So I think, in short, the first step of most of the work that's happening in the industry, that includes both of your entities, is digitizing assets, or digitizing security is the first step, which I think needs to happen anyway. And then comes down the path of custody and what is the downstream business elements of custody. The irony of all ironies to me, coming from a purely Bitcoin blockchain ecosystem, is that I think many intermediaries who are trying to make their name in this space are going after the same business model, but digital XYZ, digitized securities, bonds, tokens, or whatever the case is. And I think that many of the intermediaries shouldn't exist. But again, I think it's a journey, it's a path that we're creating that infrastructure that we all are working towards. And hopefully a new business model will emerge that will make it all worth it.
Or models. And I think we're also dealing with the stigma that this space, I think Brock talked at length here, the stories of the blockchain development space and all the stigma that it has, right? With lots of people ending up in jail and a lot of it, SEC filings and lawsuits, et cetera. Telegram being the latest, which we can't ignore on this panel. So what are some of the challenges? Let's go very short answers because we have 6 minutes left. So quick, give me 2 challenges each, and then we'll do 2 predictions for the future. So
yeah, I think for institutional capital deployment, like I just said, I think we've checked a lot of the boxes, but only very recently. So I think hopefully you'll start to see that kind of sign off from consultants, and you'll start to see, at least the people that are willing to kind of raise their hand and be first. Because what I hear from a lot of institutional allocators is, oh, we don't want to be first, but we want to be early. And you really need that
Someone's
person.
gotta be first.
Someone's got to be first. So I think 2020 will be the year where we see, the first in many different client segment categories. And hopefully, it seems that, at least we've heard, that there is demand behind that for a lot of people that are willing. And now, because of the incredible work that everyone on the stage, and I'm sure people in the audience have done on the education front, they're willing and able and feel up to speed enough that they're able to kind of deploy capital to the space.
All right, Jeanine, what's your biggest hurdle to get?
Our biggest hurdle, I think, is just regulation and clarity on regulation so that people could continue to build their businesses, and regulation not by the way of action, but really by proactive reacting to things that are happening is very different than having clear guidance of what should be doing. And I think that's when businesses will really be able to start moving into this space, whether on the investment side or the technology side or the growth side or the tokenization side. Right now it's a guessing game on where everything's going to land.
Mm-hmm.
Yeah, for me, I think, I've been building this payment network for now about 2 years now, and I spend 60% of my time, I'm a technologist, I spend 60% of time with FinCEN, CFTC, and SECs of the world. Of course, we're IBM, so we have a legal team behind it, but I can only imagine startup companies having the challenge. But to me, I think the biggest challenge is, as a technical guy, taking the principles of decentralization, because decentralization is teamed with this whole notion of, the fact that it's peer-to-peer, but taking the governance model of decentralization and adapting to the existing legal framework is what my charter is to help our senior management leadership understand, and our clients understand, that we can still operate in the existing legal framework, but it has to be in the, adopting the principle of decentralization and essentially having the best of two worlds. So I've written a lot about this topic and happy to share that with folks here.
Yeah, you can definitely get some of his books as well. In terms of the predictions, we're entering a new decade, and some of us started in, meditation and kind of prayer, trying to figure out what is it going to happen with this space in this next decade that's really important.
Thanks to my Gemini widget, I saw Bitcoin recently, today crossed 8K,
Yay.
so that's some nice
Heard
momentum. But I think, one thing that I think the whole space should be proud of is how far we've come. And I think that certainly, our motto right now could be, we have not come this far to only come this far. It's so exciting what's happened over the last decade, and you've seen so many, advancements on the liquid side, on the illiquid side, kind of meeting regulators where they stand today, developing new companies, and there's so far that we still need to travel in order to kind of fulfill the promise that this technology can fulfill. So I think that there's so much further down the road that we still have to travel, but I think everyone should kind of pat themselves on the back on kind of sticking with it through some ups and downs of the last decade, and I'm really excited for 2020 and what's to come.
We're all. Jeanine as well?
Yeah, I know we only have a minute or two left, but one of the things, Gemini is working in other avenues as well, apart from exchange and custody. We have some nascent businesses we've been involved in, but I think the biggest avenue for growth for Gemini, as well as crypto in general, and blockchain technology for that matter, is really payments and use cases for blockchain that don't involve just speculating on the upward or downward movement of the price. And that's one of the things I always say, if we can get to a point where people are transacting using blockchain technology, Bitcoin, Ether, whatever it's going to be, when our parents are transacting and perhaps they don't even know the transaction involves some sort of blockchain technology, that's really where I think we will all really be greatly benefiting from this new technology. And that's where I'd like to see us get.
Nitin, I'm going to ask you something else. So Brian Armstrong, CEO of Coinbase, gave his 11 predictions for the next decade. And he said every tech startup will have some crypto component by the end of 2020. What do you think about that?
I actually wholeheartedly agree with that. I think each one of us should be comfortable. I think the reason retail is still a challenge because crypto is still not very user-friendly per se, right? And I think, to me, that prediction is every startup company should either dabble with notion of digital assets, whether we call it crypto or anything else, because crypto has been a very widely used term. It comes from cryptography, which, as we know, it's a whole slew of technical elements. But I think that every startup entity should have some, whether it's creating a business model around it or accepting that as a payment instrument of sorts. I wholeheartedly agree with that piece. But I'll say one thing, though, which I always The reason why I went this journey is economic inclusion, and we always compare internet to blockchain from a pure technical elements is creating global markets. So everything is great, everything is working in different countries, but imagine when we go cross-border, that's when the challenges become to surface. Ideally, we would want to be able to create one single global marketplace, much larger markets, economic inclusion agenda. So systemically, me and my team are working with central banks, for example, with many of the exchanges around the world to make that a reality. So that is my next 5-year agenda, so to speak.
And I'm going to ask you, thumbs up or thumbs down, so we don't have time. He said more than half of world billionaires will be made from crypto by 2020. Thumbs up or thumbs down?
By 2020? By
2020, yeah.
20
Because
this by 2020.
By 20, I'm sorry, by another 10 years.
Oh,
So he's saying basically that the value of Bitcoin would go up over 200,000. That was part of his prediction. So thank you for listening to us. Hopefully we gave you some good food for thought. Enjoy the conference.